Hi, everyone. I am Sharon Malloch, and today I'm joined by Chris Raffield, our expert at MHC, working closely with insurers navigating the realities of today's P&C market. Chris, welcome. Thanks for joining us.
Thanks, Sharon. Glad to be here.
Chris, I know that P&C insurance carriers are under pressure from multiple directions right now. So today I'd like to focus on what's causing this pressure and what it all means for communications, and why insurers may need to rethink the role communications play in protecting both the customer relationship and the business itself. So let's start with the broader market. What are you seeing right now in the US P&C insurance environment that's creating so much pressure for carriers?
There are a few things happening at once that are putting insurers in a tough position right now. You've had repeated catastrophic weather events in different parts of the country. These billion-dollar weather events are happening almost annually now. You've also got inflation driving up repair and replacement costs, and all of this puts pressure on claims costs and ultimately on premiums. So customers are seeing higher prices at renewal time, and naturally, they're asking more questions. They're looking at their coverage more closely, and they're more willing to shop around than they have been in a softer market. In fact, the research firm J.D. Power reports insurance shopping has reached record levels as customers respond to rising premiums.
Okay, so that's interesting because usually when people talk about churn in insurance, they usually point straight to price. But price really isn't the whole story, is it?
No, not really. Price may trigger the moment, but it doesn't fully determine the outcome. When a premium goes up, a customer is paying attention. They want to know what's changed. They want to know whether the coverage is different. They want to know whether the increase makes sense. And that's where communications matter. Because if the communication is clear and relevant, the insurer has a chance to reinforce trust. If it's generic or confusing, that's when frustration grows and the customer starts looking elsewhere.
So in a hard market, renewal is not just an administrative event, it becomes a decision point.
Exactly. And every communication around that decision point carries more weight.
Okay, so that's a critical point because it's not just about price or even clarity. You're mentioning trust. Maybe you can tell us how much of a factor is that in the market today?
It's a major factor. In fact, J.D. Power has reported that customer trust in insurers is declining, particularly as premiums rise and customers feel more financial pressure. So even before a communication is sent, trust may already be fragile. In a hard market, insurers are often starting from a more difficult position. If a customer already feels like prices are going up without clear value, or that the industry isn't fully transparent, then every communication has to work harder to rebuild confidence. And that's where things can either improve or break down. If the communication is clear, personalized, and explains the why, it can reinforce trust at a critical moment. But if it's vague, generic, or hard to understand, it can reinforce the perception that the insurer isn't being transparent.
Okay, so trust isn't just an outcome of the relationship, it's something that's actively shaped or eroded through every communication.
Exactly. And in today's market, trust is one of the most important things insurers are trying to protect.
Okay, that's a really interesting and important point. And when trust is already under pressure, as you say, the risk of escalation becomes even more real. And when you and I spoke earlier, you raised that angle that I think is really important. The idea that communications aren't just about retention, they're also about reducing litigation and claims related escalation. Can you talk more about that?
Yes, and I think that's the side of the story many people don't see. In some markets, especially places like California, Florida, Texas, insurers have dealt with a lot of legal pressure around claims disputes. So the quality of claims correspondence becomes extremely important. If a claim is denied, or if there's a dispute over scope or amount, communication has to explain very clearly why that decision was made. It needs to reference the right policy language, and in some cases, that language needs to appear exactly as written in the policy. If it doesn't, or if it's brought over incorrectly, that can create risk for the insurer.
So clear communication in that scenario is not just good service, it's a form of business protection.
That's right. If a customer understands why the decision was made, they're less likely to escalate, less likely to call the service center just to get the situation explained to them, and less likely to call an attorney.
Well, that feels like a really important thread here. Explainability, whether it's related to a premium increase, a coverage change, or a denied claim, the communication has to do more than deliver an outcome. It has to clearly explain the outcome. Is that fair?
Yes, exactly. The insurer may be making the right decision, but if the customer doesn't understand it, then from their point of view, it might feel arbitrary or unfair. That's why explainability matters. It supports the relationship and it reduces unnecessary friction and risk for the insurer.
So let's talk now about the documents themselves for a moment. If insurers know communications need to be clearer and more explainable, what gets in the way of doing that?
Well, a big part of the challenge is that many insurance documents are just still too static. The business is using more data than ever to assess risk, price policies, and make decisions, but the communications that go out to customers often don't reflect that intelligence very well. They're not dynamic enough, they're not connected enough to the data behind the decision, and that makes it harder to explain things clearly.
And in many organizations, making even simple updates to those communications can still be a pretty slow process.
Yes, that's exactly right. A lot of times the templates are difficult to change and the business has to rely heavily on IT or other technical teams just to make updates. So even when an insurer knows it needs to improve a message, add more context, or respond to changing market conditions, it can just take too long. That slows everything down and makes it harder to be responsive.
So the challenge isn't just what insurers want to say, it's whether they can update the communications quickly enough, accurately enough, and in a way that reflects the data behind the decision.
That's right.
Okay, and then beyond the documents themselves, I know there's also the broader journey because customers don't experience insurance as isolated documents. They experience a quote, a policy, a renewal, a claim as a connected moment. And having them connected also builds confidence and trust in the carrier. So where, in your opinion, does communication typically break down across that journey?
A lot of times the breakdown is how disjointed the process is and the lack of consistency across the different touch points and channels used. You may have policy language being developed in one place, reviewed somewhere else, approved by the state, and then handed over to IT or another team to bring into the template or form system. Then, separate systems may be generating different communications across print, email, portal, or mobile, all with a different language, look, and feel. So even when each piece is technically correct, the overall experience can still feel fragmented.
Right. Okay. So the customer might be receiving the right information, but not always at the right time, in the right channel, or in a way that really feels connected to everything else they've already experienced.
Exactly. And in a hard market, those gaps become much more visible. They can make a difference.
Okay. So when insurers do this well, what does it look like?
The biggest difference is that communications, instead of simply telling customers that something happened, helps them understand what happened. It's clearer, it's more contextual, it reflects the right policy language and the reason behind the decision, and it reduces the amount of confusion that would otherwise lead to calls, complaints, or escalation. In other words, better communications help insurers protect trust at the very moment when trust is under the most pressure.
So for any insurers listening to this conversation, what would you tell them to focus on first?
I tell them to start with the moments that carry the most risk and the most business impact. That could be renewal, it could be rate change notices, it could be claims denials or claims related correspondence. Look at the places where customers are most likely to be confused, upset, or ready to challenge what they're seeing. Those are the moments where clear, more explainable communications can make the biggest difference. And from there, Insurers should think about whether they have the right foundation in place, whether their teams can update forms and templates efficiently, bring in the right data, and deliver communications that are accessible, consistent, and connected across the journey.
Okay, so what stands out to me today is that in today's hard market, communications are doing much more than informing customers. They're helping insurers explain decisions, preserve trust, reduce confusion, and in some cases even lower litigation and service-related costs. So this really isn't just a communication issue, it's a retention issue, a claims issue, and a business risk issue. So thank you so much for sharing these insights and telling us what you're seeing in the market.
Thanks, Sharon. Glad to be here. And if anyone watching wants to continue the conversation, feel free to reach out to me on LinkedIn. I'm always happy to connect.
Okay, thanks again, Chris. And thank you to everyone watching. Enjoy the rest of your day.